Hey guys, welcome to the Investor's Guide of Memphis Real Estate. My name is Dean Harris. As always, I'm with Douglas Skipworth. Douglas, how are you?
Hey, I'm doing great. Thanks.
Great. We are bringing you this podcast to give you the boots on the ground experience and knowledge to be a successful real estate investor here in Memphis. Please like and subscribe to our YouTube channel. Listen on Spotify or wherever you hear your podcasts. We'd love to have you subscribe and like those. Show sponsors are listed on your screen below. We wouldn't be here without those guys. Massive support from them. Please, if you can give them your business, contact anybody on that screen below. They're happy to help. Zoom calls. I'm doing Zoom calls every Thursday at 2 o'clock Central Time. If you'd like that link, all I'm doing is answering questions. If you like that link, send me an email, dean@CrestCore.com. I'll get it to you. But anything we can talk about, open questions. And I am a buyer's agent and a seller's agent. So if you're looking to buy an investment property or sell an investment property, email me and we'll set up that call. One of our new features that I've been doing for a couple of weeks now is Deal of the Week. So I've got another Deal of the Week for you guys. I'm excited to bring this one to you. Similar to last week's, we've got another one in 38118 zip code, one of my favorite zip codes. 4863 Blanding Drive. It's in 38118. It's a 3-bedroom, 2-bath. It's got 1,196 square feet. Seller is asking $95,000. Annual taxes are $1,104.11. ARV is going to be in that 165, 175 range. I don't, as I mentioned last time, I don't really give ARVs out live now. If you call me in a month about it, it could be a different price or different valuation. So reach out, dean@crestcore.com, but 4863 Blanding and 38118 is today's deal of the day. All right. Last week we talked about why cash, why lines of credit, and why hard money is so relevant right now.
Cash is king.
Powerful episode. I would encourage you guys to take a listen to that. Today we're going to talk about, and I'd like to make a little announcement. We're going to start the zip code breakdown next week. We're going to start to break down. We do this annually in August every year. We have for 7 years. So we're going to do it again this year, and we're going to take a little bit more time with it. We're going to dive into this a little bit more than we have in the past, because that podcast is the most popular podcast that I've ever done. Every year it gets the most attention. It's the most knowledgeable. It helps you guys, I believe, the most. So next week's podcast is going to begin the zip code breakdown. So today we thought we'd talk about the 23 and 24 market, give you our opinion on what it's going to look like.
Okay.
So we've got 18 months before the end of 24. My common theme up here that I wrote as number one for our notes is more of the same. Rates are going to fall some, but the market will look the same due to low, inventory. So I believe, in my opinion, our rates are going to go down some. Where are they at today? Do you know roughly? Are they 8.5?
For an investment property, probably. I know the Fed rate is about 8.75, and I know you can get a home mortgage in about the 7.75. So
we're going to be 8.5, maybe even 9. So the rate is sky high. I believe it's going to tick down from there. I believe you're going to get back into the 7s. You could maybe even sneak a high 6 probably in the next 18 months. But I believe they're going to have to open the doors a little bit and give our economy a kickstart. When, nobody knows. If I knew that, I wouldn't be sitting here, I guess, right?
Yeah. And I think it's going to be sooner rather than later.
Yeah, I don't think we're going to be at the tail end of this 18 months. We might see some of it towards the end of the year, beginning of next year. I think we can see that. We're going to have a shakeup of some kind after the election, no matter how that shakes out. We're going to have something's going to change there. So we'll definitely have another opportunity to shift. Now, I don't know how that's going to shift, right? Nobody knows. What I like to know is consistency. I hate the rate is this high, but if I know it's going to be there, I'm okay with that, because then I can plan and I can move accordingly, right? Prices will rise as soon as you see that rate fall. So what's the theme? Buy now.
Well, and that's what I think when I think of this topic, I think my simple is the best is yet to come.
Yeah.
I really believe, wholeheartedly believe that. And now to your timing point, we all acknowledge that's hard to do.
Yeah.
But looking out, and we're long-term investors, we're not necessarily fix and flippers. You might take advantage of some opportunities, but this is a buy and hold show.
Yeah, big time.
And the long-term buy and hold outlook is rosy.
Big time.
So the best is yet to come. Now, over the next 18 months, I think what you're saying is it's probably going to be about the same. Rates are going to, it doesn't look like they're going to tick up more, if at all.
Yeah,
you know, if they're going up, and they might tick up a slightly. The Fed, they're about done. They might have a little bit more in them, but they're about finished. So
and we all know it's not going to sit idle for long.
And because the reason they're almost done is because what they have been doing is starting to take effect.
Yeah.
And so that's slowing things down, and it's a little bit of a lag, kind of like with the train, where all of a sudden it slows up at the front, but then the back kind of gets with the whiplash. So the train's gonna have to start rolling again, which in this case is gonna be rolling down rates.
That's right.
So that's gonna come again sooner rather than later, but it might not be tomorrow.
Right. I'm also gonna, predict and because I did this about 6 months ago, 8 months ago, I believe that there is going to be more mismanagement from property owners be exposed. What I mean by that is there's going to be, somebody's going to have too many vacant houses, which that's what I'm listing right now. The hedge fund with too many vacants, so we're listing them. There's going to be mismanagement from a private owner because he's not going to have the finances to manage correctly. Yeah. Unfortunately, he or she is going to need to sell. We're going to have situations where they've over leveraged themselves, and with the interest rate hike, they're maturing right now. Their
payments
loans are going up.
Yep.
So their cash flow went from X to a much smaller X. Now they have one go vacant, and now they're losing money. So
that's right.
They won't want to do that long. There'll be some effort to save it, but once they can't, those people will sell. That is going to continue, in my opinion, to trickle.
We've seen that. I was going to say we've seen that. We've seen that, and we'll continue to see that.
Yes. And I say that to tell you, I've got more listings than I have since I started back here, years and years and years ago. Right. So that's way more. True. I'm in the triple digits. We're 140 something listings.
That's
so
amazing.
There are opportunities. It's not all trash. I mean, there's some houses in there that are going to be a struggle to move, but there are.
And just as a quick pause, I mean, that's probably more than anybody in the market.
I can't imagine anybody in our market has more than 140 listings
so
right
that's
now.
Congratulations.
So, thank you. We work hard, and we develop these relationships with investors, and it always makes me feel good when I help them buy a lot of houses, and then for whatever reason, if they have to sell them, they turn around and come right back to me. From an agent standpoint, it's a good feeling.
That is, right.
I believe, it does happen.
Life happens, or people want to take advantage for whatever reason, like you mentioned, and we've talked about before. Some people, they had a plan with fun to buy it and cull off some of the stuff they didn't want. But I mean, I think you're right. One other aspect that it looks like unemployment is going to tick up a little bit. So economic hardships are going to fall on people more than they have over the next 6 to 12 months.
Yep.
And to your point, when that is the case, people are going to say, hey, I don't want to put my funds into my rentals. I'd rather sell them and keep the funds to do some
for my family,
for my family, for my food,
and for my family. There's going to be a lot of that surface.
So there's going to be some more of that. So you could see an uptick in that for sure.
So we didn't have a huge, this was going to be a shorter podcast, I know, but I'm still 24. I believe, I believe we're still going to see burrs. I believe you're going to see some more anxiety from sellers and buyers. I just don't believe we're going to be in a comfortable atmosphere for some time. I don't even think after the election it will. That was one of my last notes to talk about. Prices, since prices will rise, my advice is going to be to buy now, but there's no telling what's going to happen during that time frame. So here's my advice in the next 18 months. If you know what it is going to be like now, let's buy. The rate's going to go down. I mean, it's not like we're going to get up into 12 and 13 and 14% interest rate. The whole economy would stop, freeze. So they're not going to get back up to that. It's going to tick back down. And I'm just telling you, when it does, the rates come down, prices are going to go up.
Yeah.
Probably simultaneously. Don't you know, if the rate dropped to 6 today, which it can't, but wonder if it did. Man, you'd have people
coming
out
of the woodwork.
Oh my gosh, you'd have people coming out trying to buy houses right and left.
Yeah.
So when it gets down to that point, it's not going to happen immediately. So you're not going to be able to jump on it. It's going to be a slow and gradual thing because people are going to realize, I can sell it for more now. Yes. So I'm encouraging you in the next 18 months, when even though you're not going to like the rate, I'm encouraging you to get into some of these deals, especially some of these deals of the week. I got 80 something more of those. So That's my
there's an
encouragement.
opportunity, and we've talked about this before, that you date the rate, you marry the house. So if you can get that property, you can get in there using your loan right now as a tool.
Yeah.
Then you can refinance it out in the near future.
Yes, because I'm here to tell you, like I've talked to other investor agents in our town. It's tough. It's tough right now with the rate to buy an investment property. We talked about how to do it on the last show,
yes.
But it's tough to buy. So here's what that means. Don't be listening to that and say, oh yeah, I don't need to buy. You should have the opposite feeling. When the stock market goes down way down and takes a dive, what do the savvy
Everything's
investors
on
do?
sale.
They buy everything they can afford to buy. Okay,
that's right.
Even if the returns right now are not good, even if it ticks down a little bit lower, or the rate is a little higher, right? They still are buying it because they know it's going to come back up. Same situation here. You know that the rate's going to come back down and get better. Let's date the rate and marry the property. If you find a good long-term property with a good rental amount that fits, let's buy it.
And you've said before, and I loved it, you said 3 things are going to happen.
Yeah.
You remember?
Yeah.
That prices are going to go up.
Yep.
Rents are going to go up, and the rate is going to go down. You know those 3 things are going to happen. We know that's going to happen in the near, medium, definitely the long-term future. That they're going to the prices of the houses are going to go up, the rent rates are going to go up, and the interest rate over time, you're going to have opportunities to lock in at lower rates.
I'd like for you to save the podcast and call me out in a year, and let's see.
Yeah.
That's how confident I am on it. I believe all 3 of those things are going to be true.
And not to mention 2 years, in 3 years,
no,
in 5 years,
no telling them.
In 10 years. That the prices are going to go up, the rent rates are going to go up, and that there are going to be opportunities where the rate is down and you can lock it in.
This is 2023. What was the market like in 18? It's 5 years ago, right? Prices were low.
Prices were lower and rents were lower.
We sold more
rates
houses.
Were lower.
More houses in that year than I've ever sold.
In 2018. Yep.
Okay, right. What do you think 2013 looked like? I know you know.
I was buying. I mean, it was good, but it was totally different. The prices were significantly lower, rates were low, and the rents were low.
Okay, I just gave you the last. I broke it down. All right, so
that's
now
in
5 years, what is it probably going to look like?
The prices and rents will both be higher.
And the rate.
The interest rate will likely, between now and then, it will have gone down.
Oh, 100%.
So the question is, will it still be down? That's not what we're saying. We're saying when it goes down, take advantage of that opportunity.
100%. And I think if you're waiting until it goes down, I think you might be a tick too late to get some killer deals. Because I know one thing.
Because the prices and rents are going to continue to go up over time.
And your rate is going to go back down at some point, somehow. And then when it does, you can refi and get back into that.
Correct.
All right, what about 10 years?
It's hard to predict. But it's not hard to predict that the prices are going to increase and that the rent's going to increase.
With all the stuff that's going around here, Amazon plants, Blue Oval
City.
What is the other? Nike's got stuff going everywhere here. We're just a distribution city. This is going to continue to grow.
And so much, to your point, the distribution and the way warehouses work. I mean, it's a great economic engine in Memphis.
Yes.
It's got a lot of long-term economics behind it. So does the country with millennials buying and with low inventory, pent-up demand. I mean, prices will continue to increase on the real estate side.
Yeah.
The supply constraints as well as the demand of the population growth, all of the things that drive demand will increase. On the pricing side. On the rent side, we've always talked about this, that rent rates are a function of income.
Yeah.
And as income continues to increase, rent rates continue to rise. People just want to spend 25 to 50% of their monthly income on their housing, whether it's rent or a mortgage or whatever they're doing. That's what they want to spend. And so we know those 2 things are going to rise, price and rent. And so we're just saying the rate over time is going to go up and down, up and down, up and down. And you just lock it in when it's lower, and then you bear with it when it's higher and lock it again when it's lower.
I'll tell you this. I'm not going to get caught in this.
Yeah.
In 2018, I was wishing that I could have bought more houses than I had. In 2013, I wasn't even buying houses yet.
Yes.
Right. I'm not going to fall victim in 2028, and I'm certainly going to be hopefully close to done with it in 33. So I am not going to miss that boat. I'm not going to miss that opportunity. I'm not going to look back on it and say, hey man, I wish I could have done, something more in 2023 and 24. I'm just not happening.
I promise I have met so many investors over the year, and I'm going to give an analogy. My son he's working on his Eagle Scout.
Yep.
And I can't tell you how many people come up to him and say, it's Life Scout, then Eagle Scout. You know what an Eagle Scout is. Everybody knows what an Eagle Scout is.
Of course.
You don't know what a Life Scout is if you don't do Scouts.
No.
That's right before Eagle.
Yeah.
And so many people come up to him and say, man, I quit when I was a Life Scout. And they regret it. They all regret it. And they're like, man, you got to finish. They're 50, 60, 80-year-old men. And they're talking about how they regret quitting at Life Scout. Similar, I meet people all the time who are like, oh, you do real estate? You invest in real estate? I used to have rentals. Man, I so regret selling them. I wish I never should have. My parents owned them and we sold them and my da-da-da. And the point being is like, what you're talking about is like, when you get into the future and you look back, it's a life full of regrets if you don't act now. And that's all you're saying. You're not saying buy bad deals.
No, I'm saying buy killer houses and ignore the rate. I know that sounds silly. Buy good houses in good areas for the good prices that they're being sold for right now, and we will worry about that rate down the road.
And you can get it refinanced, and then you're going to look up in years, and like you've said a million times, is nobody ever, when they pay that house off, don't say, man, I overpaid. I paid too high. All that interest I paid over the years. They just say, man, I got a free and clear house. Awesome. Now I'm going to go get a line of credit and help somebody else do it.
The one thing you won't do, you'll look back. Let's say you look ahead in 3 years and the rates tick down and you can refinance. Well, the one thing you will for sure do if you don't buy houses then is regret it. You'll 110% regret it. If you'll listen and buy, and the rate goes back down and you clear up another $500 in cash flow and, I'm finally making some money. That's what you won't regret that either. No. That's kind of what I'm trying to tell you is if you stop now because you think it's bad now or not so hot now, then how hard do you think it's going to be to obtain properties in 2 years? When the rate's lower and the prices are going up, and
everybody's competing
pay way
again.
More. Everyone's competing again. Meanwhile, if you go now, all you're going to do is go to your bank and refi and you get a raise. So
congratulations. And
because the rate's lower, you can continue to buy more houses. You've just got 5 or 6, 7 more than your competitors. And now you're back down to the same rate. That's cool. Oh, I didn't make very much cash flow those first 3 years. Who cares? I'm not trying to get paid right now on these. I want to retire off of these. I'm just here to tell you that buying right now sound like you might look at it and go, why in the world? But if you listen to last week's podcast and then listen to this week's podcast kind of in an order, you'll understand where we're coming from. We gave you ways to buy. We're telling you to buy now and why you should, and why you will 110% regret it in 2026 or 7 or 8 or whatever, when our rate is back down to a normal amount and you can get out of that high rate. You won't be able to buy those houses then. I'm just telling you. You won't be able to buy the houses that you can buy right now. Today's deal of the day at 4863 Blanding. I promise you in 3 years, you can't get that for $95,000. I'm just telling you. You're not going to be, you think you could have got it 3 years ago? No, you'd have probably paid 73 years ago for the same house in the same condition.
Yes.
Now you're paying 95.
Well. I remember well.
So I think I made my point. I think 23 and 24 overall is going to be a little the same. You're going to have to navigate through some tougher waters, but there is going to be ways to buy property.
Yes. Period. Yeah. There 100%. No doubt. The best is yet to come. Even though we have a little bit of the same for a minute.
Yeah, I think we're in good shape.
Keep going.
I'm just saying this for this podcast. I'm trying to buy the biggest package of homes I've ever bought this year. So if that's it, and that's right. Legit. So if you're if you think that I'm preaching and I'm just trying to earn real estate commission, that is not it.
No, we're just here telling what we're doing, what we've learned, how we can help people. Yeah. If we're taking our own advice, man, we're buyers at times, we're sellers at times. It's great.
I mean, that package I'm buying, the rate's going to be high.
It is.
But you know when it won't be? Later on down the road, and I'll get a X amount of dollar raise.
And you'll be so glad that you bought those.
You're so glad that I did. And if it goes even lower, I'll refinance it again.
Yeah.
And just get another
that's
raise,
exactly right.
Right?
Yeah. No.
So buying now, I think we've talked through why that's important and why and how you can do that. Last week's podcast talked about how you can do that. This week's is why and what we're thinking in 2023 and 24. Anything else?
No, man, great show. I think if people want to learn more, just subscribe to it. And if they're ready to make a move, give you a call.
Let's go. Subscribe to the YouTube and listen on Spotify. Anything you can do to like and help us out there, we appreciate it. We will see you guys next time.